The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 7th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life tosses at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. You can always send me an email. Let those fingers do the walking. Steve@TFNN.com. Please, inside the subject heading, put radio show question, and inside that Tiger's Den, well, any ping will do. So let's go ahead and take a look at what these markets are doing on this terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trade up 167 points. 25,668 is the print. About 0.7% to the upside. S&P's up 11 points, 0.4% to the upside. NASDAQ 100 up 26, 0.3%, 74.65 is the print-a-rooney. The Russell 2000 up 4 points. Semis are up 7. Trannies up 54. Spot volatility index trading out at 11.12, well below the 50-day exponential moving average. Gold's up $1. Silver up 4 pennies. Light sweet crude 23 cents to the upside. Leading the charge to the upside, by the way, it is Google. $25 in change. Booking Holdings up 24.56. Zebra Technologies, green stripes out there, $21 the upside, or 14.5%. Tesla up $20 or 6%. Legan Pharmaceuticals up $17. So we've got some movers and some shakers shaking to the downside. Spark Therapeutics up $22, 28% to the downside. That is a stinger. Transdigem Group, TDG, off $13 or 3.5%. Weight Watchers losing a bit of weight today, down 13%, $11. Wouldn't you like to be able to lose 13% of your weight in one single trading session? I would. Orthofix Medical. That's what it looks like. They're down. OFIX, ticker symbol, off $10. Enanta Pharmaceuticals. Enanta. Man, couldn't they come up with a different name than Enanta? Maybe there's reason why. I'm sure there's a reason why. But anyways, hey, it's off 10% or $10. So where do we want to start? Was that a question that came in? SBAC for long, based on upcoming 5G. Okay, so that is a question. That is a question out there, just a coded question. So let's take a look at SBAC. That's the ticker symbol. That is, let's go to our 3 time frame chart out here, SBAC. This is for Tarpon 2 inside the Tiger's Den Rooney. So you're looking for a long position. And so the question would be, well, when? When is the question or the answer? When is the question? And now I'm going to give you the answer. The answer is not now. Not this very second out here. If we take a look at Stevie's Ninja Trader chart out here, what we're going to see, you're going to see Stevie's green, sometimes red line, the oscillator and change line. And you can see that it turned from green to red. Maybe you can't see it. Let me just describe the date, July 27th out there. Now, Tarpon, what that tells us is that the price oscillator, difference between 2 exponential moving averages, was at 0. The price oscillator was at 0 right at that very moment. And on that very day, July 27th, price was testing Stevie's red line. And what it did was it deflected lower. It also on that day closed below the bottom of its TAS daily profile. Now that says bearish. What does that mean? Directionally speaking, bearish. Well, then we have to go find support. So if we go look for support, we're going to see the red dash line. That's the Tommy DeMark trend line, setup trend line. TDST is what it's referred to. And that's where we have 9 consecutive closes above the bar 4 bars earlier. I know that's a mouthful. It is what it is. And the beginning of that setup becomes a level of support. Now, how does that work? I don't know. I just know that he's a smart guy, and it does work. And therefore, when we get to those 9 counts, we pay attention. And when price pulls back, we pay attention to that as a level of support. So in one breath, I can say, hey, SBAC came right back to a level of support, which it did. It did. It tested nice little doji in Stevie's window on July 31st. Then you had a nice big old bear, a bullish engulfing on August 1st. You know, what we like to look for, Tarpon, is we like to see follow through. One-hit wonders don't really do much for you and I, and this did not have follow through on that next trading session. So where's price headed to? Headed right back to that Tom DeMark setup trend line. That price out there is 157.02. And here's where you're in a bit of a quandary. We know that price continues to, in essence, try to get above that oscillator and change line, and it hasn't been able to do so. So do you buy support here? Something to think about. Let's take a look at what the 3 time frame profiles, daily, weekly, monthly. Weekly says, so weekly and monthly kind of give you an interesting view. The weekly says price point for you to look at would be about the 154.91 level. That's the bottom of its bullish structured. That is a chart right dead smack in the center Rooney there. 154.91. If price closes below that, that says, okay, that was the wrong time to enter. So you could go ahead and do it there. You get to close below that, minimize your losses, wait for some other proof and justification. The proof and justification, if price closes below that level on a weekly basis, that's 154.91, says, guess what? Maybe this is going to go all the way down to the bottom of the monthly profile, 137.71. You're below the daily profile. We looked at that on that chart. You're below Stevie's red line. That says we're headed lower. And I would be patient on SBA Communications Corp. So thanks for asking. I hope that that helps you out. Now, in the next minute, can we go take a look at what is the message of these markets out here? Well, let's go see. Let's go kind of do a let's do a litmus test out there. I don't even know what that means, but if I did, I would say, hey, where's price trading in relationship? And this is the equity futures contracts. Where is price trading in relationships to its resistance levels? And if we're looking at the ES Mini daily time frame, ES Mini NQNYM, there is no resistance. There is no visible resistance in the ES Mini. You're above your recent swing point. You're headed to the all-time swing point high out there. In the NQ, you've crawled all the way back up to the Facebook, in essence, or pre-Facebook high from July 25th. Hasn't gotten there. It's going to go peak and take a look at the 75-30 area, maybe move higher. In the case of the Dow, you're up above the prior swing point out here. So no real visible resistance. Hey, in the Russell 2000, she's headed to 1705.95. You heard it here first. That's the top of the daily profile. It's also the top of the weekly profile. Russell 2000 headed higher. Dow headed higher. NASDAQ headed higher. ES Mini headed higher. Do we need more than that? We'll be right back. My dad, may he rest in peace, always had great advice, such as, if you want more, you have to become more. It's been a guiding light that has driven me to always be the best that I can be. When it came to trading and investing, I wanted more, and so I developed a set of disciplined tools that led me to become the #1 market timer for the S&P 500, according to Timer Digest. Dad went on to say, if you want more, you have to give more, which is why I took those same disciplined tools and created a black box that could look at any instrument for any time frame and tell subscribers subscribers and I whether it was bullish, bearish, where support or resistance was, and whether an instrument was forming a top or a bottom. The scans from my black box are now a part of the Mastering Probability service, which allows me to give more to subscribers. This coming Tuesday, August 7th, from 5 to 6 p.m., I'm holding an open house at TFNN.com, and I'd like to invite you to see the power of my black box. When it comes to trading and investing, I know I can help you become more too. Just go to the homepage of TFNN.com to sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So Tesla, a little discussion about that, if you will, inside the Tiger's Den. If we take a look at it, trading out at 364, 15 million shares behind the move so far. Last time price was up in this area was June the 18th, 12 million shares out there. The high has not been tested. That level is 373.73, so that should be tested. If price closes above that, for whatever the reason, doesn't really matter, is where price should head back to is its previous highs, and above that, then what you have is an A to B equals CD to the upside. If we take a look at those previous highs out here inside of Tesla, we're right around the area of 386.99. So pretty good chance Tesla is headed for that level. If price closes over that swing point that we referred to, which was June 18th, does it today as an example, it already has the volume behind the move, then you would have a confirmed A to B equals CD to the upside. Caveat emptor would be price has to get above 386.99. That's what it looks like on the daily time frame chart out here. On the monthly chart, the key level, you can see that what Tesla's been doing is basically been trading inside a consolidation. The primary consolidation range out here is 386.99. We already discussed that level in essence. And the bottom of the consolidation, roughly 283.50. 283.50. Don't worry, I'll get it out. And basically, it's been trading in there since June of 2017. So for a full year, basically, now I won't say the word basically again, so I don't know why it just creeped into my vernacular, so to speak. It's just been trading sideways for over a year. Make that 14 months, give or take out there. So I don't know whether this consolidation is going to be busted through or not, but if it is, it's got a huge measured move to the upside. whether it was a good rumor, bad rumor, whatever it was that he was doing, we just simply are going to just take a look at the technicals here. And yeah, that would probably tighten the sphincter muscle of the shorts out there. I would say Mr. Chanos would be hitting himself upside the head saying, holy Toledo. Probably wouldn't use the word Toledo, but because I'm from Detroit, we kind of say holy Toledo. I'm not really sure why. Maybe you say that too and you're not from Detroit. Okay, hey, back to the markets out here. So we took a look at TAS market profiles. We took a look at daily and weekly resistance levels, or can be resistance levels, prices above that, daily and weekly, with the exception being the Russell 2000 out there. If we look at spot volatility, it's well below the 50-day exponential moving average. Typically, bad things don't happen to the S&P 500 when the spot volatility index is below that. So what does that say to you and I? It says prices headed to the top, potential top of its consolidation. Do we know that it's real consolidation out here? Well, we don't actually. We just know that price is going to make its way all the way back up to the highs. If 2872-ish acts as resistance and price is unable to clear it, then what we would have would be your good old-fashioned consolidation. Yeah, that's what we would have inside the S&P 500. And it's a big one. It's a doozy out there. I don't know if price in U.S. dollars is going to crack through this area or not. It should. It most likely will. But I don't have a guarantee. And so I like to have guarantees. It's only 11 points away from basically where we are trading. But that is the level to be watching, this 2872. Maybe I was wrong all along, and that we're really not trading into consolidation, that really what we experienced between January 26th and February the 9th inside of the Dow, I'm sorry, inside of the S&P, well, inside the S&P and Dow, was nothing more than your good old-fashioned vanilla flavor. Do you like vanilla? Yeah, vanilla's not too bad. But that's only if they don't have dark chocolate. Or better yet, sea salt caramel. There's nothing wrong with that. Or even a toasted coconut. Now you're talking about a good use of vanilla out there. But in this case here, this may have been nothing more than your garden. Stay on track, Steve-O. Nothing more than your garden variety normal retracement, which the markets get at least once every year. For the most part, on average, over the last century, it's been once a year. We hadn't had a 10% correction in a while, so this was just a catch-up out here. And so maybe the markets in the S&P 500, maybe Stevie's gotten it wrong all along, and that it's really not a consolidation. It was your retracement. It was your correction, so to speak. And now price is just simply ready to head to higher ground out there. And we have proof that that's what it wants to do. The question is it right now? And I don't know the answer. Hey, if I take a look at market breadth inside the New York Stock Exchange, again, day two, you're getting follow-through inside that advanced decline oscillator level. It is above zero, closed above zero yesterday, still above zero today. Says that buyers are in control. Now, it's not as if you needed to turn into this show at this point in time to see the Dow up 158 points to say it's, hey, Stevie just told me that buyers are in control. I know you could have figured that out as well. But it's always nice to know that the market breadth is actually bullish here. And in essence, bullish from a directional standpoint is exactly what the market breadth is confirming to you and I. So that leaves the S&P 500 with one thing, Curly, just one thing that stands in its way from breaking to higher ground. And what is that? It needs the troops. It needs the troops to follow, to assemble out there. It just needs it. And how are we going to know if the troops are following? If they are following the general, so to speak? Well, in this case here, you and I are taking a look at the left-hand side. Screw that. We're just going to go ahead and expand this chart. We're just going to look at one chart out here, which is the equal weight S&P 500, RSP. Oftentimes overlooked, but not by you and not by me. And what we can see here is that's priced at 105.81. It has to get its us in get going here in order to be able to come close to taking out its high, closing high. We're looking at a line chart out here at 107.43. Now you can see the SPY very close to its all-time closing high. That's at 286.58. We are 285.73. That is less than, my math says that's less than a buck. No, my math is pretty bad. It says it's $1.20. $1.20 or so away from that level. Now, the problem here, it can't be resolved. It must be resolved out there. You want me on that wall. And that's this. You don't like to see divergences between the equal-weighted ETF because that typically points to the eventual picture out here. It's really the tell in the marketplace. And you want to see it. I was trying to look back at further divergences on this chart. For some reason, they've been erased. It may have been that this chart got corrupted, and now I need to go back and rebuild the whole thing unless I go figure out how to download an old version. You don't want really for me to get involved with that during the show here. But in any event, this is the only difference. It's the only thing right now that I can see that's getting in the way of being able to clear those all-time highs inside of the S&P 500. Certainly, we don't have that with regard to, well, I don't know. Let's go see what traders around the globe are saying. I think that there's a lot of high-fiving going on. If we take a look at the ES Mini, priced in pounds, if you're sitting at Goldman Sachs' desk, if you're sitting at JP Morgan's desk, if you're trading for George Soros, if you're trading for Berkshire Hathaway, and you're sitting over in London town right now, and trust me, they have as many wealth management clients over there as they do over here, over there, over here. What we know is the ES Mini breakout mode, all-time highs right now in pound sterling, in euros, even in Japanese yen. Buyers around the globe, they are high-fiving, they are loving the U.S. markets.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So Tom writes in and asks if we could go take a look at Apple. Tom did indicate whether he's long, short, what information that he was looking for, which is fine. But if you're looking for some very specific information, please feel free to put as much detail into the question, and I'll give you what it is that you'd like. So let's go take a look at Apple and take a look at its 3 different time frames out here, just like we did when we were looking at Tesla. AAPL is a ticker symbol. And so let's start there. So in the case of Apple, what we know that we have out here is a, whoops, sorry, I didn't mean to do that. What we have, when we take a look at a daily time frame, I believe that's the case for the weekly time frame as well, is we have really a couple of different patterns. The one that I'm most interested in is the old lightning bolt, the A to B equals CD pattern. So the swing point on Apple, well, first, the swing point that we begin with the conservative A to B equals CD pattern, began on April 26th, Tom. And that was down at 160.63. Makes a run up to a high on June the 7th, gets up to 194.20, and then makes a 40% retracement. We'll call it a 0.382 retracement into the low of June 25th. Now, as it was doing that, in essence, it was setting up a consolidating pattern. We didn't know that until we got to the trading day of July 25th and 26th, when price did not take out that prior swing point out here. So it looked and it appeared to be consolidating. But then price just simply found support at the bottom of that daily profile out here. And that was support. Never made it all the way back down to the bottom. And then you kind of know this. This is history. On August 1st, this thing gaps higher. Huge volume behind the move. 70 million shares taking out the swing point with volume. That says you've got an A to B equals CD to the upside. Do they always complete? No. Do they complete often? Yes. In this case here, is it likely to do a 1-to-1 A to B equals CD to the upside? Probably not. Now, I'm not really referring to what takes place in the next hour, the next 10 hours, the next 2 days, but where Apple appears to be headed based upon taking out a swing point with wide price spread, accelerated volume, only doing a 0.382 retracement is more than the 1-to-1 A to B equals CD. That says you're looking at 223.43 likely. First stop is going to be 214. Well, Apple is pulling back today. Volume behind that move, 17 million shares. Is that a big deal? No, not a zip zilch. Are you kidding me? The trading session, in essence, that it's trading into was August the 2nd, the following day of the breakout, which had 62 million shares as well. So just a light volume pullback on a Tuesday. Does that mean price can't pull back any further? Heavens to Betsy, no. That takes us over to Stevie's other charts. If we go take a look where Stevie's green line is, says we have a rising price oscillator above zero. Doesn't get more bullish than this. Price is above any TAS market profile. Still, price could pull back to 201.64. So to the extent that you were looking for a possible place to buy Apple, maybe some type of options trade or something with the volatility being, at least the volatility index for the S&P being so low, then 201.64 would be your number. That would be nothing more than a pullout to a level of support and, in essence, the breakout area. So I hope that that helps you with regard to, hey, can you take a look at Apple for me? I did. And we did. And if we take a look at the longer term, the monthly time frame chart, there's already an A to B equals CD that's underway. That says 218 is the next stop. You're trading at 207 right now. Let's take a look. I don't have any other questions here. None from the den. I don't believe any other email questions. Again, you can reach out to me, Steve at TFNN.com. Always helpful to put radio show question inside of the subject heading. So with nothing here, let's go take a look at what else do you want to take a look at? Actually, I don't know what you want to take a look at. So let's go take a look. Oh, there was a question earlier this morning that asked if I could take a look at the U.S. dollar index. So I can. We can. We should. We will. Let's go do that. I almost forgot about that. My apology. I didn't ignore you. I just simply forgot to write it down. But it's the U.S. dollar index. I don't recall who sent it in. I'll probably think about that, though. But let's just take a look at the U.S. dollar index. And the question was, what were my charts saying as far as the longer-term view on it? which I may need to go to the continuous contract to do that. But we're going to check this out right here, right now. Yeah, I'm going to have to do that. So let me put up the continuous contract in order to be able to give you what the Stevie's indicator tools are saying with regard to the U.S. dollar index. And that also means we want to go take a look at, well, let's stay with the daily chart. What do we see in a daily time frame chart here with the U.S. dollar index? Very easy. You see that same thing that I do, nothing more than a consolidation. Wow, I didn't even know I had that tool out here. That's pretty cool. That wasn't the one I was going to grab. I guess I knew it. I just don't really use it. The old ellipse tool out there. But here's your good old-fashioned consolidation, give or take. I'm not going to worry about having the lines exactly correct. So we know there's a consolidation pattern in play. Price is up towards the top of the consolidation. Maybe that's resistance, maybe not. We do know that support would be Stevie's green line, 94.98 out there. But if we take a look at the longer-term chart out here, let's do this. And I just need to make one adjustment because it's got the daily Stevie line out there. We're going to change this to a weekly time frame because that will make some difference out here. So there's your consolidation. But here is what we know. Here's what we know. And that's important out here with regard to what do we know. Let me just take you back. Let me hearken back to another time in life when we can take a look at what took place as Stevie's red line was turning green with envy. Oops, darn it. I think it was Control Function 2. I thought that's what did it. There we go, right here. And this takes us to the time period of October 2016. See how that red line turned green right there? And just like the other chart, I don't remember which chart it was. It was one that Tarpon asked about. SBAC, I believe, was the chart. See how at that point in time, price was testing that line as it was turning red and green, telling us the price oscillator was at 0 for its weekly time frame chart. And what we saw there was a bullish test. Unlike SBAC, we saw a bearish test on the daily. This is the weekly. Once you have a rising price oscillator above 0, and anytime price is above Stevie's line, that is the condition that you have. It's bullish. Any pullbacks are nothing more than a retracement to support out here. And voila, what took place was the U.S. dollar index ran up to the 104-ish area, give or take. Now we can see that what the price was doing on a weekly basis was making one of Stevie's Rhodes momentum indicator signal bottoms. Now that is a breathful. And you got that final confirming signal out here on March 30th as it made that little bull sash weekly candle, price closing above Stevie's red line. And we can see any other tests, any other pullbacks, not many, were nothing more than a test of support. Now, this line turned green with envy once again in June of 2018, June 29th to be specific. And what we typically see is price and Stevie's line catch up to each other. Let's go ahead and get rid of the consolidation box out there. We don't need it right now. So what I would anticipate is over time, this is a weekly chart. It may take a week or two or more. But what we really should see out here, as long as we're in this consolidation, is the two shall meet. Price and Stevie's oscillator and change line. And when those meet, that will give you the next indication. If it's similar to what we saw back here in October of 2016, no reason for you or I to even have to guess, to even have to surmise how that test will unfold. But if it becomes another bullish test, first, price runs up to that Tom DeMark setup trend line. That's up at the highs from June in 2017. That's 97.16. And above that level, all the way back to 104. Where's the U.S. dollar index headed to? Probably back to 104. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. John writes in, John in Sarasota says, where does Bob, that's my bullish or bearish system out here, and we're going to do a workshop. Open house tonight. By the way, you were invited. It costs nothing to get in. Takes about 2 seconds. It takes 20 seconds. Depends on how fast, how quickly you can type in your first name, last name, and your email address. That's at the homepage of TFNN.com. And if you can't be there, sign up so that it's on your members page. You can go back and watch this about an hour-long workshop on my black box system that in a second tells you exactly what the market outlook is for whatever instrument it is that we decide. Now, I know this is small print out here, maybe just to not confuse you. There'll be a lot of white space now. But this is take a look at the ES Mini. I've got the system, John, closed right now for all of the other Bob charts. I mean, I have subscribers see it for the GDX, the IBD 50, worldwide indices out there because you need to know what's going on around the world, different commodities, every Dow stock, currencies, you name it. So they've got access to that information. What I do have out here is I have the 1 hour, because this show tends to be not the show, but a lot of listeners out there are looking for more, hey, what's happening now? More from like an intraday, although I try to do my best to give you the larger scope out here. So we've already done the larger scope. Hey, get to it already, Steve. Get to it. So here's the 1 hour, 2 hour, 5 hour, and then the daily time frame outlook for the ES Mini, the NQ, the Russell, and the Dow. So on the 1 hour, tells us that we're in a consolidating bullish mode. It's bullish. On the 2 hour chart says that we are in a breakout bullish mode. That just means prices above all resistance. All resistance, whether it's the top of a 2 hour time frame chart or whether it is above Stevie's green line. 5 hour breakout bull, daily breakout bull. Tells you where support is at. Right there. Tells you if you were looking to buy this from an intraday standpoint, looking to ask the question, where is support? You know how often somebody calls and says, hey, I want to buy this. You want to be able to buy support in something that's bullish. Well, right now, that level inside the ES Mini on a daily basis would be 2842.25 out here. And it tells us that that is the Stevie's green line. It also says we've got support at 28.26. So that would become your range. That, in essence, is the top of that daily profile. What this also does, what Bob, bullish or bearish, does, it identifies, it gives us those Rhodes momentum indicator signals out here. And we can see that on a daily basis, we have topping signals. And we do. We have it inside the NQ, inside the Russell, inside the Dow. The Dow right now is the most recent one. Oh, well, Steve, I thought you just said the markets are going higher out there. If I take a look at the daily time frame chart here for the Dow, it's just a signal. It hasn't confirmed. You can see here how price is moving higher due with less relative energy. What's nice is John knows, I know, you know, I don't have to even look at the charts. In other words, my eyes cannot manage. Can you imagine I'm looking at every constituent inside the NDX 100 and everything inside the IBD 50 in all 30 Dows. Can you imagine if I had to go through charts to figure out what the market conditions were and whether there were topping signals or bottoming signals in multiple time frames? Are you kidding me? What kind of information could I give to my subscribers out there? Not as much as what I can provide them now for all of those instruments, which clearly just lets us know, hey, there's just a topping signal. I live in Florida, and that is like saying it's going to rain today, that there's a chance of rain. Really? No kidding. Of course, that's like me telling you that the market is bullish right now with prices moving higher. Of course, there's more to that. And as your meteorologist, there's a little bit more to that here. But from a daily standpoint inside the Dow, price just moving higher, doing less relative energy. Hey, the same thing going on inside the S&P 500. But until it cracks support, it doesn't mean a thing if it ain't got that swing. That swing inside the Dow Equity Futures contract would have to close below 25,429. Probably not today, but tomorrow, to then say, okay, then buyers and sellers are giving us a new piece of information. But until that happens, are you not going to go play around a golf or not going to go sailing because it might rain out there? Probably not. If you did, you'd be locked up in your house all day. And I don't want you to be locked up in your house no more than locked up and not taking a trade or however it is that you're going to manage your longer-term and short-term portfolios out there. So as we speak right now, hey, look, on a 1-hour time frame, there is a topping signal inside the NQ. What does that mean, Jelly Bean? Well, if we do take a look at the 1-hour chart here for the NQ, you can see there's the same principle. Price is moving higher, doing less relative energy. Then you did have the bears show up out here. Of course, we can see that on the 1-hour time frame chart, that Tommy DeMark set up trend line. So that is a key level of support on any pullback that takes place between now and then. That would be the close of today, and that level is 74.44.50 out here. I'm not saying that's what's going to happen. I'm saying that's support. I'm saying don't even think about shorting it. You can think about it all you want. Not recommended. Caveat emptor out here. And as I said, I may have been giving you, not intentionally, bad information all along because I've been calling the move inside the S&P 500 a consolidation. And maybe I just simply was wrong because we haven't had a test of those highs just yet. And soon enough, we're going to know whether we're in a consolidation or not, much like we were in 2015. And that's likely going to require the S&P 500 to go test, maybe get above, and then we'll determine, or not we, but the market will determine is it going to stay above that 2872 level out there. Again, in summary, what we've had occur so far in 2018 is nothing more than what takes place once a year on an annual basis, on average, is a correction. And that took place in February. Now, the odd thing is, and it's not odd, if you're going to look for the market to pull back, there's basically 2 times of the year where you would see that happen. The first time is at the end of December, early January, into the end of January. Well, February 9th actually qualifies as that time frame. Yeah. How about that? And then, to a certain extent, we did have a test of those lows and a rejection of those lows in April. And then we had, again, another test that formed a higher low in May. And yet again, another higher low at the end of May. And then even another higher low in June. And oh my goodness, even another higher low in August. Kind of makes you think, something to think about. And look, I've been saying we're in a consolidation inside the Dow, and I may have, again, unintentionally misled you. But we haven't tested those highs out there, and so I don't know that to be the case. Those highs are quite away from where we're trading right now, 26,616 out there. So it'll be the Dow. We'll be on Dow watch for a while. That is if the S&P is able to take out its highs out there. So, John, I hope that answers with regard to what Bob is communicating. Here's what I can say. I don't even have to say it. All I have to do is spray it. And let's go take a look at today's August the 7th. If we just simply go take a look at the newsletter, and we can look at, here we go. Here you go. Here's front page out here. Here's daily. Here's monthly. Let's just go ahead and expand this. We can do this. I know we can do this. I think you go zoom, don't you? Or do I? Yeah, guess I got to go zoom. And if we make, what's 200% look like? There you go. Now you can see it. So now we're looking at the ES Mini. Daily breakout bull mode. Weekly breakout bull mode. Monthly breakout bull mode 2. Steve Rhodes with TFNN. We'll be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back up, folks. Hey, don't forget to sign up for this evening's workshop. It's from 5 to 6, even if you can't attend. All you have to do is give us your first and last name and an email address. You'll automatically be there. There's no credit card. You'll get a chance, an opportunity to see in detail how my black box, the Mastering Probability black box system works, what it's looking at, what those signals mean. So if you're not a technical trader, you don't have to be. If you're just trying to make some decisions about your portfolio, what you should be investing in, what is bullish, what is bearish, just then please come on over and check out tonight's workshop. If you are technical, then you will love what it has, because you can use the Bob system to quickly scan, and your eyes will see where there's some potential opportunity for you. It already does that work so that you can go do your work to it. And that takes us to Courtney. Courtney S. writes in and asks, she says she's a new listener to the show. Well, welcome to the show. And asked me if I could just re-explain why I look at these instruments, some of these instruments in other currencies out there. And I'll just tie that into, Tucker had a comment with regard to the GDX getting smoked out here. And if we take a look at the GDX right now, here's a monthly chart for the GDX. You can see this thing has been trading in a consolidation since November of 2016. So basically for 2 years, this has been dead money. Now, when I say dead money, I'm referring to trading between $20 and $24. Yeah, percentage-wise, it's okay. But basically dead money out there. That's number one. That doesn't answer Courtney's question. But if we do take a look at gold, gold does show us the potential that it's trying to form a bottom. It's got one of those Rhodes momentum indicator signals out here. And we can see that price is trying to hold Stevie's red line. But what price has to do in order to confirm for you and I that this has turned bullish is close above 1244, even, Steven, the bottom of its profile. But more so than that, Courtney, there are people that trade gold that their base currency is yen. And we have to know what those traders are seeing on their screens. And traders that trade gold in pound sterling, we need to know what their screens show. And traders that trade in euros. In order for gold to get legs, it has to move higher in every currency. Right now, it's moving lower in every currency. That's not a good thing to be investing in, such as the GDX as well. So thanks for writing. Folks, we'll see you tonight. If not, I'll see you tomorrow on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.